For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Today, we will be analyzing an article that suggests Palantir stock may be in a speculative bubble and could be at risk of a significant price decline. While Palantir Technologies has experienced remarkable stock price appreciation, the question remains, is this growth sustainable or is it setting up for a major correction? Over the past couple of years, Palantir has delivered exceptional returns for investors. The company's stock soared by 167% in 2023 and skyrocketed by 340% in 2024. As of early 2025, the stock has already climbed more than 50% within just 6 weeks. Such rapid gains are rare even in the fast-moving artificial intelligence sector and have naturally led to speculation about whether the stock is becoming overvalued. Momentum-driven rallies like this are not uncommon, particularly in industries undergoing significant transformation. Artificial intelligence is widely regarded as one of the most disruptive technological advancements of the modern era, and companies leading this revolution have attracted immense investor enthusiasm. However, while growth stocks can experience extended periods of euphoria, they eventually must justify their valuations with strong fundamental performance. As the saying goes, all good things must come to an end at some point. The key question now is whether Palantir's meteoric rise is an indication of sustainable long-term growth or if it represents a speculative bubble that may soon burst. Of course, not everyone agrees that Palantir is in a bubble. Some analysts argue that the company is fundamentally strong and positioned for continued expansion. Wedbush analyst Dan Ives, for example, has expressed an optimistic outlook, asserting that Palantir's artificial intelligence platform is becoming an essential tool for enterprises across various industries. He believes the company is poised to benefit from increased artificial intelligence investments by the United States government and sees enormous opportunities for Palantir in the commercial sector. However, while there is merit to Ives' bullish argument, others remain skeptical. A stock bubble typically occurs when prices rise significantly beyond what the underlying business fundamentals can support. When evaluating Palantir's performance, it is worth examining whether its stock price appreciation is aligned with its actual business growth. Palantir's financial results for Q4, reported on February 3rd, 2025, offered both promising developments and areas of concern. The company's revenue surged by 36% year over year, reaching $828 million. Revenue from the United States market showed particularly strong performance, climbing by 52%. Additionally, Palantir secured 129 deals valued at $1 million or more during the quarter. Of these, 32 contracts were worth at least $10 million, underscoring the company's ability to land high-value agreements. While these results are impressive, they also raise questions about whether the current stock price accurately reflects the company's financial performance. Despite robust growth, Palantir's stock has climbed at a much faster pace than its revenue and earnings, which could indicate a misalignment between investor expectations and business fundamentals. Looking ahead, Palantir expects revenue to grow by 31% in 2025. In a statement, the company confidently highlighted that this outlook significantly surpasses consensus analyst estimates. While this forecast remains strong, it does represent a slight deceleration compared to the prior year's growth rate of 36%. Slowing growth is not necessarily a cause for concern, particularly for a company that has already achieved significant scale. However, for a stock trading at elevated valuation multiples, any signs of deceleration can lead to increased scrutiny. Investors should consider whether the company can sustain its rapid expansion and whether its current valuation leaves room for further upside. During the company's Q4 earnings call, Chief Executive Officer Alex Karp addressed concerns about Palantir's valuation and long-term prospects. Karp argued that Palantir's success is driven by its ability to anticipate future trends rather than relying on past performance. He stated that industry experts often look to historical data when evaluating companies, whereas Palantir is focused on shaping the future. Karp went on to describe Palantir's current position as being at the very beginning of a larger transformation. He emphasized that the company is leading a revolutionary shift in artificial intelligence and data analytics, suggesting that the best is yet to come. If Karp's assessment is correct, then concerns about a stock bubble may be premature. However, history has shown that even strong companies can experience stock price corrections if valuations become too stretched relative to business fundamentals. A key indicator of whether a stock is overvalued is its price to earnings and price to sales ratios. Currently, Palantir stock trades at 196 times projected earnings and nearly 95 times trailing 12-month sales. These valuation multiples are significantly higher than those of most companies in the technology sector. For comparison, comparison, many high-growth software firms trade at far lower multiples. While Palantir does have a unique market position, such lofty valuations are typically reserved for companies experiencing rapid and accelerating revenue and earnings growth. However, Palantir's projected revenue growth for 2025 suggests a modest deceleration rather than acceleration. While Dan Ives maintains a highly optimistic view of Palantir, he represents a minority opinion on Wall Street. In February, the average 12-month price target for Palantir was approximately 29% lower than the stock's current trading level. This divergence in analyst opinions suggests that investors should approach Palantir with caution. While the company has promising long-term prospects, current valuations may already reflect much of its future growth potential. If Palantir's stock is indeed in a bubble, the next logical question is whether that bubble is about to burst. The truth is, bubbles can persist for extended periods before eventually correcting. A historical example is the dot-com bubble of the late 1990s, during which stock prices of internet companies soared to unsustainable levels. Former Federal Reserve Chairman Alan Greenspan warned of irrational exuberance in December of 1996, yet the market continued climbing for several more years before the bubble finally burst in 2000. Stock market bubbles do not collapse simply because valuations are high. Instead, they burst when investor sentiment shifts. For Palantir's stock to experience a major decline, a significant portion of investors would need to lose confidence in its future prospects. That moment may not arrive anytime soon, particularly if enthusiasm surrounding artificial intelligence remains strong. At the end of the day, if a bubble is characterized by prices rising rapidly without fundamental justification, then Palantir's valuation metrics suggest that it could be overextended. However, if one believes that artificial intelligence will continue transforming industries and that Palantir is positioned as a leader in this space, then the stock's elevated price may still be justified. Ultimately, stock valuations are subjective. As long as enough investors believe Palantir's stock has room to grow, it could continue its upward trajectory. However, if sentiment shifts and investors begin to question whether the stock's valuation is sustainable, a correction could follow. What do you think about Palantir's current stock price? Let me know your thoughts in the comments below. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.